been a while since I've read anything from Sovereign Man. You know, I've subscribed to his little free newsletter thing. You know, and I get his articles, or you know, his little. Sometimes it's not really an article; it's just him telling you something, whatever. That's more or less what it is. Not really an article. But you know, he's got some good stuff from time to time, actually, and I enjoy reading stuff he talks about. You know, he's out of the States. He's in like Chile, Santiago, Chile. He's got this organic farm he started. Like, it's just incredible. But he's paying attention to stuff. I love this guy, Simon Black. He's got this one titled "Investment Advice from Paris Hilton." Like, what the? Angelina Umansky, a 39-year-old spa owner from San Francisco, was visiting a friend in Miami 2 weeks ago when she heard about a new condo development downtown. Hoping to find a vacation home, but worried that others were interested too, Miss Umansky arrived at the sales office at 8 a.m. the day after seeing some model units. About 50 other buyers were already in line. 2 hours later, a sales agent summoned her and said she had 4 minutes to decide which unit to buy. She acted fast, offering $350,000 for a 2-bedroom, 2-bath unit. Miss Umansky then thinks she got a bargain. When she called on behalf of a friend less than 8 hours later, she was told the asking price on a unit like hers had climbed to $380,000, or nearly 9% of an increase in price. Above is the opening story from a New York Times article published back in February of 2005, February 3rd. Pretty much the very top of the biggest real estate bubble in history. But very few people realized at the time that the market was such a bubble, even though it was exhibiting all of the classic signs. People were literally lining up to buy overpriced assets. Nobody thought you could lose money in real estate back then. And prices kept rising quickly. A Central Florida home builder, Trans-Eastern Homes, used to hold sales events at hotels and convention centers. Is this starting to sound familiar? Like the commercials we hear on the radio today about these learn how to flip houses, right? Prospective customers would spend 5 minutes looking at a subdivision map before buying. The company would announce price increases up to 16 a day over a loudspeaker, putting the crowd into a frenzy. There are stories of dozens of condo buyers camping overnight in New York City for a chance to buy an incomprehensibly expensive unit. Fights would break out between agents at showings. Some customers would bribe builders for a chance to buy a unit. But one of the biggest signs of the top of the real estate market was investors flipping pre-construction condos. Someone would put a hefty down payment on a condo before the building even started construction. They had no intention of ever living there. They just wanted to flip to another buyer at a higher price, often just a few weeks later when the building was slightly further along in construction. According to Times, a 1,000-unit Miami condo building sold out in 36 hours back in 2004. At least 50% of the buyers were flippers. This is the type of behavior that happens in a mania. People stop buying assets because of the investment's strong fundamentals. They have no intention to hold. They just want to flip quickly and make easy money. The flippers have returned today. Instead of pre-construction condos, however, today's flippers are participating in the most frenzied sector in the market: initial coin offerings. So, you thought this was about real estate, did you? If you're not familiar, an ICO is a way for a business to raise capital from investors. Unlike traditional ways of raising capital, though, they like venture capital funds or angel investors, businesses raise capital through an ICO by selling a digital token. These tokens sometimes represent ownership in the business, but more often than not, the tokens confer nothing more than a prepayment for the company's product or service. ICOs are sort of like crowdfunding meets crypto finance. Imagine that you're surfing your favorite crowdfunding site and come across a business selling some new Lego toy. You pay $20 to pre-order the Lego toy, becoming one of the company's many crowdfunders. With an ICO, the company would issue you a token representing that you are entitled to one of its Lego toys at some point in the future, presuming they ever get around to making them. But here's where things get strange. These tokens trade actively in the market. Speculators buy and sell these tokens, and prices have been rising at an unimaginable pace. So it would be like taking your Lego toy token and then reselling it at, say, 10 times the price you paid only a few days later. Is the Lego toy really 10 times more valuable? Probably not, but this is common among ICOs. Because of these huge returns, ICOs are attracting more and more speculators looking to make a quick buck. Most have no idea what they're buying or even why. They don't care about the fundamentals of the business or the risk. They're flippers. Now hedge funds are starting to flip ICOs too. Consider the recent ICO by messaging app Kick Interactive, K-I-K, right? Not Kin, although, well, excuse me, Kin is Kick, the Kick token. Kick owns Kin. The company raised around $100 million from over 10,000 contributors. A group of early investors, including Blockchain Capital, Pantera Capital, and Polychain Capital, invested $50 million in a Kick pre-sale before the ICO. Let me make sure. He is talking about Kin, right? Kick token. Kin. Yeah, K-I-K. Kin.kick.com. Just double checking. Gotta make sure I'm, that he's talking about the thing I think he's talking about. The company raised 100 million, whatever. These Blockchain Capital, Pantera Capital, and Polychain Capital invested $50 million in Kick pre-sale before the ICO. And they received a 30% discount on the token price. These early investors can sell 50% of their token stake, $25 million, at any time, locking in a more than $10 million profit. In addition to flipping, ICOs are getting so frothy that even celebrities are starting to endorse them. Floyd Mayweather, the boxer, posted a photo of himself on a private jet in front of piles of $100 bills saying, "I'm going to make a crap ton of money on August 2nd on the stocks.com ICO." Paris Hilton, speaking of stocks, I'm just curious. Coin market cap. Is stocks on here? Yes, it is. I just want to look at the chart. So, keeping in mind. And I love the people. Jay Snip, you get paid every time you talk about one of these ICOs. They're paying you every time. Listen. Do you know how much money Floyd Mayweather made? And did Floyd Mayweather, by the way, did Floyd Mayweather say, "This is a endorsement, this is a paid advertisement"? They got the best boxer out there. I'm going to make a killing, he says, right? On August 2nd. Here it is. Comes out, ICOs, again, and this is as soon as it started trading, I should say. $1.22, $1.40, back down to $1.04, 104. Jumps way up here, $1.82 again. Hits an all-time high of $2.61. Where is it at today? 50 cents over the last few days. Now it's at 80 cents. Where was it when it started? $1 something. So even with a massive, this is me talking now, not the article, massive celebrity talking about this, hyping everybody, you got to get into this one. You got to get in. Floyd Mayweather's going to make a killing. It just goes to show you that thing came down hard. So, point being, they're now using celebrities to pump certain ICOs. Anyways, Paris Hilton told the world she was looking forward to participating in the Lydian Coin ICO, whose founder happens to be facing jail time. These are all signs of an extraordinary, massive bubble, he says. As with all bubbles, there are certainly some legitimate, well-managed businesses whose tokens might actually be worth something. But at the same time, there's limitless garbage out there masquerading as investments. This bubble might persist for years, or months, or days. No one knows. We only know that at some point or other, bubbles always burst. Keep that in mind if you find yourself chasing the next hot ICO. Make a calculated decision whether or not it's worth the risk, and recognize that there's a decent chance you could lose your entire investment. To your freedom, Simon Black. Well, Simon, I want to thank you, but fingers, double fingers crossed. So far so good. Again, we haven't taken a massive beating on anything. You know what I mean? Some are down, some are up. Right? We're doing all right. But he makes a good point. Bubble frenzy. The problem is, it's kind of the same thing as Bitcoin's in a bubble, Bitcoin's in a bubble. You guys said that at 200, 100, 300, 500, 800, 1,000, 1,500, 2,000, 3,000, 4,000. Bitcoin's in a bubble. And next year when it's, over 10,000, according to Webbot easily, then what? Oh, it's a bubble. Well, here's the thing. If you and I are the flippers, the condo flippers, we need to get in and out like he's saying. The problem is, as everything else sucks, the amount of people and money flowing into these cryptos is going to be insane. Again, according to Webbot, Cliff High next year is going to get even worse than this year, so get ready for some big moves. You and I are in the beginning, if this is a bubble, where someone just put the straw in their mouth to blow up the bubble and hasn't even blown yet. Hasn't even breathed in to get ready to breathe out and start blowing the bubble. That's where we're at now. So there's plenty of flipping to do, so to speak, or holding. So anyways, interesting little article from Simon. I want to read that to you. But am I changing? Maybe I should unload. Absolutely not. Hanging on to my tokens. And again, we've got some that we want to hang on to long term, Pillar, etc. But anyways, I can see why he says it, but cryptocurrencies and stuff are just a little bit different than the usual, bubbles that we're talking about. This ain't no bubble yet. We ain't even seen a bubble yet. Take care.